Why, hello, everyone. Thank you so much for joining the missing piece, profiting from dark pool and institutional trades. So I just wanted to do a quick poll at the beginning, and let's start this poll here. The market is manipulated and institutions have an advantage, yes, no, or unsure. Because I'd like to do this poll again at the end of the presentation and see what you guys think. So I'm going to count back from 5, 4, 3, 2, 1. Publish results. So I guess we've got 100% on that. So, well, that's good. Any of you that know me know what we're doing here. So anyway, the missing piece, profiting from dark pool and institutional trades. Okay, so are you aware that this is half of all trades are done in private exchanges and out of sight of retail traders? What this actually means is that every trader only has half of the available information that they need to make educated decisions, which is grossly unfair for us being retail traders, but we're going to flip the script on that. Do you think you could improve your edge seeing these massive orders and following along for the win? In this webinar, we're actually going to cover that sort of stuff and be able to see where the institutions are actually building their positions. We can capture the breakouts and we can increase our ROI on that. Now, before we jump into any of this, important disclaimer. Anything that we're talking about here is fully educational content. I am not making any trade recommendations. Please consult your professional financial advisor rather than me for this. Okay. So this is me. I've been trading since 2016. And so we're coming up on 10 years. It was February 2016. I actually decided I was going to be a trader. Within a few months of me getting into the market and watching the market, I had my red pill moment. I'm a Gen Xer, so of course the Matrix is widely referenced, because for me, watching the entire market either implode or just take off, and then, for example, if the market just absolutely tanks, what's the news look like? Well, the news is saying, oh, retail traders fled to safety, or we're uncertain about this and that. It's like, okay, is that all retail traders? Can all retail traders move the market? Because to me, it seemed quite coordinated. How can everything be affected all at once? Is it because, to me, when I was thinking of it, it's like there must be one really big retail trader, right, to be able to move the market like that. And I was onto something. And in April, May of 2016, I met Stephanie Kammerman, who we've become really good friends, and she introduced me to the dark pools. When I joined her trading room and I saw my first block trade, 50,000 shares of Bank of America, I melted. I didn't have $50,000, let alone 50,000 shares. And she's like, Dave, knock it off. Tell me when there's 500,000. So I pulled myself up to my desk and promptly fainted again, because that, to me, made perfect sense, right? That was like Neo finally taking the red pill. And so I'm the founder here of MobiTick. I'm not going to tell you the whole story, but over the past 9 years, we've worked together collaboratively to bring you a great application. And the idea is that to get you the most actionable trade information in as few clicks as possible. That's what we're doing. So what was I missing? We had great earnings, but the stock drops. Bearish news, the stock rallies. The sky's falling, the market rallies. Analysts, they're usually wrong. Talking heads, pump and dump. And you've probably all seen that Jim Cramer interview where he actually says, yeah, I pump and dump the stocks. A moth farts, continuing. So much conflicting information, but I discovered very quickly the markets are highly manipulated, and we can profit from it and increase our ROI by just following the money, right? If you think a news story, oh, here's a news story, here's an analyst, here's whatever. No, follow the money. That's always the case because that's what's actually speaking in the market. So now previously, before all of this, and I'm talking back into the late 70s, early 80s, the institutions had a massive problem. How do you trade massive share sizes and not move the market? And I'll give you an example here. Here's the problem statement. A large trade on the open market wouldn't get filled at all. Retail would jump in beforehand. Now, this here is a level 2 order book. You can call it level 2, level 3. This is the NASDAQ book viewer. And so I doctored this image because you would very rarely see something like this. But this was the other day, a couple of weeks ago, at 8:30 in the morning. If you were watching this order book and you saw that at $254, there's somebody wanting to buy 1 million shares of AMD, what do you think would happen to the price of the stock? Would this get filled? You can put something in the chat if you like. Oh, and actually, I prefer the engagement, really. If you guys want to ask questions, chime in, anything like that, please do. So what happens to the price of the stock? If there's an open order for 1 million shares here at 254, guess what happens? I'm buying it at 254.01. And then the institution doesn't get filled. Or they get terrible prices, right? Same thing on the sell side. If this was over here at 256.89, if you see 1 million shares to be sold on AMD at 256.89, are you going to buy it? Absolutely not. You're going to short it at 256.88 because this guy is not going to get filled either. So this is the problem that the institutions actually have. So the problem is solved with the creation of dark pool exchanges. We'll talk about that for a minute, and then we'll get into the really juicy stuff. So the institutions have an edge. They can trade massive share sizes. They don't have to report the trade until it's complete. No matter how long it takes for the order to complete, once it's finished, then they have to report it. It's perfectly legal, and they're in and out before retail. And retail traders like us are left holding the bag, unless you know better. So what we're going to discuss is how to see where institutions are positioned before the market moves and how to profit from it. So let's dive in. So block trades and dark pools. I'm only going to spend 2 minutes. I'm not going to bore you with too much history. In the land of the blind, the one-eyed man is king. And these are the institutions. And this is by this guy. I'm not even going to mention his name, but clearly he's old. So you guys might have heard this guy, Gus Levy. He was an investment banker. He worked for Goldman Sachs since 1933, and he passed away in 1969. And he headed their trading department, but the point here is that he pioneered the development of trading strategies such as block trading. And what on earth is that, do you ask? Well, these block trades are high volume transactions in securities that are privately negotiated and executed outside of the open market. Now, remember I showed you that level 2. A lot of these trades will never show up on the bid and ask as limit orders. They're done outside of the exchange. Once they're completed and everybody's happy, then it gets reported to the exchange, right? So that's where retail is left in the dark. You can have these backroom deals, billions of dollars traded, and then boom, there you go, out to the market. Everything's there. Look what we've done. So dark pools, April 1979. Well, how do institutions fix their problem? Clearly, they lobby government. The SEC allows securities to be traded off exchange. Before that, you couldn't do it. 1980s, these large block trades or prints. So what you'll wind up hearing, I'll interchange 3 words: blocks, trades, and prints, all the same thing. It all goes back to the historical sort of thing of a ticker tape, where they used to do it by the wire and the stock quotes would come out. Anyway, that language has remained. So these large trades placed privately to avoid market impact. In 1986, the Instinet machine first came out, the dark pool trading venue. And in 1987, the first intraday dark pool called Posit was out. Now, this is where things get interesting. 2012, 40% of trading volume is done in dark pools. Now, think of it as a retail trader. Up until then, now, you're actually seeing less than 50% of the trades, because more than half of them are traded in alternative exchanges called dark pools. Okay, so as traders, if you've never heard of the dark pool, you've never traded it, could you imagine being able to pull back that curtain and see where institutions have their positions? Well, let's look into that. Prints come before the news. And we've got some examples. And you can see these examples every single day. And I'll tell you, when I pulled up some of these examples, it only took me 2 minutes to find them. So let's go ahead and have a look. Here's the chart of United Health with the massive prints overlaid on it. And so this is an older one from a presentation that I did previously. I'm going to get my little laser pointer. But remember, I told you I fainted when I saw 50,000 shares on Bank of America. I would be in the hospital if this was new to me, right? Oh, I fixed my laser pointer. We have this consolidation period here. Look at this and look how long it is. And look at the size of these shares. 2 million at $300, right? That's $600 million. 1 million, 1 million, 2.5. You see this consolidation. And we're going to talk about these patterns a little bit. But you see how we get these prints. We test the print. We upthrust. We break below. This is a distribution pattern. We'll learn a little bit more about these. But let's have a look and see what happens. So here's the down move that we're going to discuss. Look at the news. And this is July 29th. This is right here. July 29th. United Health signals prolonged pain with new, far lower profit forecast. Shares fall. Uh-oh. That's some pretty bad news, especially if you hold stock in UNH and you've struggled through this massive pullback. But wait, there's more. There's 1.2 million here, 2 days, the next day, actually. The next day, 1.2 million. Now on this day, this is the print. 2 days later, look what happened. Increasing volume. We held this print the next day, increasing volume. Now, my friend Stephanie, that I mentioned earlier, she did a trade where she bought United Health 340, 350 call debit spread for January 16th, risking $95 to make 950. So any of you that don't know about options, it's a long position. And so she was risking $95 to make 950, a 10x, right, on that. Seeing this print. But remember, we just looked at the news. You know, we haven't hit bottom on UNH. So what happens here 10 days later, UNH stock is among Buffett's final picks. Should you follow? So United Health is one of the stocks Berkshire Hathaway disclosed in its Q2 filings, and they bought 5 million shares, roughly $1.6 billion in a clear vote of confidence. Now, as a retail trader, how much pain could you stand? At what point would you have gotten out of this mess down here, especially increasing volume, massive red candles? There's news. It's going to get worse. I'm going to cut my losses. Right? But wait, we've got a nice break, retest, and we're off to the races. And Stephanie and most of the traders in her trading room saw this. Stephanie took half of her profit 10 days later for $295. So she risked 95 to make 300. And this was only taking a part of the position off. And knowing this, everybody sold down here. But if you followed the dark pool, you're buying at the bottom. News is irrelevant in the dark pools because they know what's coming. Patty B here, she saw this trade August 1st. And when people were taking profit, she said, this made me enter. Thank you, Moby. Moby made my month. Some of the traders that are around have larger accounts, trade stock or options. And when you have some sort of, I'm going to make this much a month or whatever, for one trade to make your entire month, that's well worth the price of the subscription. So what happened to United Health? Because Stephanie took profit 2 days, 10 days into her contract that had 6 months to expire. Watch this. What happened to United Health? This is the entry date down here at the bottom. This is the exit up here, 200 exponential moving average on the daily. We know that, well, that's where it ended. You can't tell from down here that that's where it's going to end. That's where it did end. We can see that. So there's ways of managing your trades in order that you can stay in it for the longest period of time. And then one of your trades will not work out because we've kept rolling up the hill. And then one doesn't work out, but you've made a fortune doing this. It's a $130 move, 52% for the stock. So imagine 237 to 353, right? That's nice, especially for 5 million shares, whatever that number was. Here's another example. This is silver, SLV, which is the iShares Silver ETF Trust. Let's look back here in July, $259 million here. And you can see these trades, 2 million, 5.8 million, 2 million, something like that here. Then we have a consolidation period, and you'll notice that metals, commodities tend to move a little bit slower. $583 million here in this section. Now, when gold and silver actually broke out, remember, you see the news, gold at all-time highs, silver ripping it. When we see these sorts of things and we're breaking out of this accumulation pattern, silver takes off to the moon. But what happened to the price of silver? Well, let's have a peek. This is the breakout down here as far as prints were concerned. Had a little bit of consolidation where they're adding to their position. Test, 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 right? This is another 3, 5, 7, 8.4 million shares right here. 36% in 5 weeks. There to the top. Now we got some extra prints here. They could have been adding to their position, but we'll talk a little bit about this. Break up, move down, and it didn't. It did come back later on, but we're over here now. So this is the meat of the trade, right? You don't have to stay in this forever, but when your run is exhausted, then you get out, move on to something else. This one is fantastic, the SPY. So the SPY here, $7.7 billion, 12.9 million shares on December 24th, or sorry, December 18th, 604.37. You can see this here, that came in here. Okay, and then we had some prints, we broke below, but watch this. Here we have increasing volume, closing below the print. Are we going short? Right? If you have this information, are you going short? Increasing volume, closing below the print. This range right here is $16 billion. And you can't blame the retail trader for this. I don't know anybody who has $16 billion. This was a 21% crash. And we see the S&P 500 loses $5 trillion in 2 days, the Trump tariff sell-off. This was April 4th. Okay, that's right here, April 4th. About here, right here, April 4th. Wall Street's fear gauge soars to a rare crisis level. What that means for stocks. The VIX closes above 40 are rare, says Nicholas Colas. But how do you know when this correction is over? When there's buying at the bottom. Look at this. $11 billion within a couple days. April 7th and April 9th. 12.5 million shares at 496. 9.5 million shares at 505. We were just told the market's over. We're doomed. The VIX is going to the moon. Trillions are going. And what happened? I'll tell you one thing. There's a nice break. Retest the prints. Off to the races. But where do these shares come from? So, okay, they bought 21 million shares of the SPY. Great. Yeah, but where did they come from? They come from you, the fearful trader, everybody that was told to sell because the world is ending. They got scooped up down here. Now you don't have the shares. You lost this money. So they took it. And now you can chase them again and make the same mistake. So what happened to the SPY? 36% rally from this point. Now look at this. This is market manipulation, although it's legal. Look at all of these, 10 million, 8 million, 16 million. These are tens and hundreds of billions of dollars. Do you think you're even 10,000 shares of the SPY, if you have that, is worth a drop in the bucket compared to these institutions? It isn't. But what if we can profit from that and see? So these are trades we're watching right now. And I just picked, and I'll tell you something. So it's for Moby Tick, it took me 3 minutes to find these trades. And all I did was look at Friday. And I was like, oh, these are fantastic. I'll just put them in the webinar. And I'll show you guys how to do that as well later on. So here's a couple trade recommendations. Now, I'm not telling you to take the trades. I've got that disclaimer, right? This is just from our dashboard. We'll look at this quickly. This was Friday. And what I noticed just by looking, Intel, 6.5 million, right? There's two trades there. That's absolutely massive. Pfizer, PFE, 4.8 million, within 16 cents of each other, right here, 10 o'clock and noon. Then we got Schlumberger, $35, 2 million, right? So that's a lot of money. So let's look at these ones. So here's our friends at Pfizer. Now we're looking back, and what I'm doing, I'm repeating this so that you guys can get an eye for what's going on. We've got these prints here at the bottom, and we have a splash. It moved up first, right from the print, it moved up. That's ominous. Usually it moves in the opposite direction. When you start looking at individual stocks, you'll see how they actually behave. We had these prints up here, look, 6.5 million, but then we retraced back to these prints and consolidated for a while. We have this consolidation, and look at the consolidation here, October through November, over a month, over 20 trading days. Then we have a retest of prints right here. Look at the low of the day, 3 million print right here. And then these are from November, 3.3 million at 25, 5.2 million at 26. So what does that mean? We're going to be bullish above 25.50. Actually, I should have made that 26. Bearish below 23.50. We're below these prints and above those ones. And so I put this bullish above 25.50 with the targets, bearish below 23.50 and the targets. Now this is fantastic for intraday trading. We can do another webinar on that, trading around the dark pools intraday. But look at these tests, right? If you're watching that intraday bounce up for a swing. Let's look at Intel. This was the second one we looked at. So back in September, 2.2 million print right here. Then a 2.5 million print. We retested the prints and we broke above, increasing volume. Look at this. Retested the print again. 5.8 million print right here. And this is in October, within a few days in October, 6 cents of each other. Rejection of the print, up thrust tagged it, moved lower. Okay, this is starting, this trend, I have a 4 and 8 exponential moving average. This shorter term trend is starting to turn down. Okay, so this is looking bearish. Then we've got the retest of prints and 11.5 million in new prints. Right here. 3 different trades. 3 million, 2.1 million, and this is a 3.3 million there. So we're going to be bullish above 36.50 and bearish below 32.75. Why we have above and below is because all what comes across the tape is that the trade was executed at a specific price. There is no indication of whether it's bullish or bearish. We need some confirmation, some sort of pattern, something that gives some additional thing that gives us the edge that we get into the trade with more confidence. Adding the dark pool into your trading plan, I believe, would do you a phenomenal service just to be able to watch this. Okay, so bullish above 36.50 with your targets and bearish below 32.75. Let's look at our Schlumberger. 4.1 million prints here at the bottom. I'm going to skip all of this other stuff. 4.1 million prints at the bottom. Look at this, 3.3 million, 400,000, 477,000, all within 50 cents of each other, essentially. Then we have a retest of prints. Look at this. We have this. We tested the print there, held the print. This one opened, tagged it, closed above, and we have this increasing volume. Great entry, by the way. Any of you technical traders, these are hidden support and resistance lines you don't even see. So we have the retest of prints and 3.1 million shares of new prints. Look at this. We came down and tagged this one. Increasing volume. Tag the 50 simple. That's what that one is, by the way. And 3.1 million, 35 and 36. We have increasing volume. I mentioned that. So we're going to be bullish above 37, bearish below 34.50. And I've got that 37, 37.50. Targets all the way to 41. And so we can trade this up because when you start looking at the dark pool, you'll notice what sorts of trades are big for specific stocks. And then you can get an idea for how far they usually move just by doing some back testing and looking. So finding your own opportunities live in a few clicks. Okay, what I'm going to show you here, this is Moby. Okay, this is just a regular dashboard. Now, it does so many things. I'm only going to show you 4 things, and I'm not going to go into a lot of detail, okay, because that's a whole other webinar. We can break that down if you're interested into specific topics. What my goal is to get you the most actionable trade information in as few clicks as possible. So what I'm just going to cover a couple things. The regular dashboard shows you the top 10 trades by value for the day. If you're looking at it, say you just logged in, what on earth is going on? Well, we've got Lennar Corporation. They have some volume, bonds, right? There's bonds. Nvidia has a little bit. The Qs have about 500,000. Apple has 1 million. The SPY's at 600,000 so far. Google, EXAS, whatever that is, Exact Sciences, and IBIT. Well, actually, this one's really interesting today. Look, 3 million on IBIT. And if you know what IBIT is, that's the iShares Bitcoin Trust, I believe. So you can trade Bitcoin through these ETFs. IBIT, nice 3 million. We can have a look.
Dave, now, that's a request from Dan, was IBIT. So it's perfect timing. That's one that Dan was looking at in the chat.
Oh, okay. Thank you. I haven't been monitoring the chat. But okay, I'll put down IBIT. Well, actually, we'll look at that in a second because I just want to cover a couple things and we'll go back to IBIT. So in preparation for this webinar, what I actually did is on the dashboard. I just looked at this print section, right? Because I'll just go back to Friday. Friday, I don't want the opening and closing prints. I clicked by size, and it's like, oh, CVS, 6.6 million. Anybody interested in CVS Health? Right? Because that's $500 million right there. Now, any of you that are fainting like I did, I mean, it's just, I can't fathom that much money. But look at this Intel. There's two right there. 6.5 million emerging markets, 3 million on Pfizer, 2 million on Schlumberger, Newell Brands, 2 million, VG, Grab, 2 million, Grab another 2 million, Pfizer, 1.8. So when all I did, I'm like, oh my God, Intel, Schlumberger, and Pfizer. We'll pick those for the class. Okay. And so this gives you an idea of what's going on in the market today. Now, if we go back and look at Monday, what's today? Tuesday, 8 million on lab. That's bio tools. It's up to you if you trade biotech. ACHR. This one is quite popular. Archer Aviation, right? So this gives you some ideas of what you could potentially trade. So let's just go ahead and we'll click on IBIT, actually. There's another 2.5 million today on IBIT for Dan. Let's click on IBIT. So what this actually does is it loads another tool from the toolbar. You can get to it that way. Now this is called the print lookup. We have the daily chart, which you can change to weekly, 5-minute, whatever you like. Use it for intraday trading. The important part about this being the daily chart is you can see all of the trades going back to January 1st, which was a holiday of 2020. So by January of this coming year, we will have 6 full years of historical data on 10,000 stocks. And so if you want to see the dark pool, look at this. I'm going to click on the calendar. What's happened in the last month? Boom. What are the biggest trades in the last month? So when we scroll back and start seeing where the institutions are buying and selling, right? This is my peanut butter and jelly, we call it. I stole that from Stephanie. 200 simple, 200 exponential. We're not handling that. You have your own technical analysis. Why did Bitcoin hold 49.50 for so long? Because there was 3 million in prints there. Why did we hold 48.96? Because there's 1 million there. Now these are the largest prints in that time frame in the last month. Let's go to the last week, right? There's some more. If I want to only look for trades that have lots of prints, these are the biggest ones. We'll do the last month, and I can add a couple more right to the chart just by clicking on it. You have the seasonality, time and sales, real-time news, things like that, all right here. If you're trading intraday, we switch to, that is a 5-minute. Let me switch to a daily chart. This is the daily chart. Okay, so I will go back and I'll switch here to the month and see what's happening here. Actually, that was pretty good on the daily chart, or on the 5-minute, right? You could see those. I just didn't look. So we can see a whole bunch of consolidation here. Let's go out 60 days and see what the largest trades are, or 90. So we'll go back here. You can see this, watching this if you're trading Bitcoin. Massive consolidation. And when you start breaking below, increasing volume, right? It's a great shorting opportunity. And now we're way down here. I'll change this up a little bit. We'll go back to the month. So now, Dan, look at this. If we're watching prints, if we close above 53, right? Then where's our target? If you have some moving averages or something like that, I would say 57.21. Because this is what the institutions are doing. This is where they have their positions. They can be pulling it back to buy more and get into a position at a better price. But if we close below the prints, we close below $40, or let's say we close below these prints, say 47, 46.50, then there's another shorting opportunity there on IBIT. And so you can see that happening there. So the next thing that I wanted to show you is, okay, so we picked a few of those things from the dashboard, and that was pretty simple. I'm going to show you something, and this is a core feature for anybody who's a swing trader. I'm going to click on the opportunities tab. And what you wind up saying is, okay, Moby, if you have 10,000 stocks, what can I actually do so I don't have to look at 10,000 stocks? Well, we're bullish above the dark pool levels and we're bearish below them. So what this actually does is it lets you pick a couple things. This is saying, okay, well, give me all of the shares that are over 1 million, like the really big ones, and let's summarize that for the last 10 trading days. We'll have a price range of between $1 and $1,000 for the actual stock. We can adjust that and show me the results and show me the trades that are just above the prints currently. So this returns 96 possible opportunities, right? So what this is telling us, it's like, well, Apple is above the prints. It's up $3 on the day. And this signal thing, I'll explain that in another video. Anyway, that's bullish. And if you look at this, if you hover over it, summarizes the trades for you. There's 1 million at 278.50, and there's another 1 million at 268.24. And we're just a few pennies above that print. If you want to see the seasonality, oh, Apple's just always bullish, right? There you go. But if you want to click on it, there's your print lookup. Let's have a look to see what's going on with Apple. Is this a decent trade setup, right? And we can see here, these are by default, it shows you the largest trades in the last year. So we've got this here. There's a 4.6 million November 12th at 273.47. We're $5 above that. We've got increasing volume, right? This looks like it might move. So what I'm going to do to double check is I'm going to switch back to month. Now the month is interesting because remember, the dark pool, they're huge position traders. They can't get in and out like we can in a day trade because they can't just dump 10 million shares in the open market. They use the dark pools and stuff for that. So what I wind up doing is I look at the bigger picture. What are the largest trades in the last year? And see where the big positions are. And if I can't make something out of that, like if it's too wonky, then go in a little bit tighter. Because what this tells me here, look at these millions. 2, 1, 1, 1, whatever. Nobody knows how much that is. That's a lot of money. So we have this consolidation here breaking up. We've got a new print today. So there's a couple things depending on your risk profile. Many traders don't trade the same day as a print. This is looking bullish, increasing volume, new high out of a range. Okay, you can do that, or you can wait another day and see if there's another print tomorrow or see what it does. We can come back and test the print and move on. So this meets all of my criteria to go long, except that there's a new print today. So there's that. So there's Apple. So look at this. The whole point is within 5 seconds you had a trade. There's Apple. Okay, and look at what's actually moving. We don't want anything that's down on the day. AES, that's technology. Amazon, right? We'll look at Amazon. We'll look at that. And this is doing a similar sort of thing. So you can plan your trades around what the actual institutions are doing. So the other thing, what we also have is we have watch lists. And the 3 that I actually showed you, Pfizer, Intel, and Schlumberger, you can add them to your watch list. Now, this is a different watch list than any other application because what you actually do is you put in the ticker, you put your targets in, you're above and below, and it actually consolidates all the dark pool information. It lets you know if you're above or below it at the same time. So here, what I've also done is I've set alerts. I want to know when Pfizer is above 25.50, and it is. It's green. And I got an alert to say, hey, Pfizer is approaching 25.50, and it gave me $0.125 notice so I could get in. It also alerts you on volume. If we were breaking below, it would say at 23.62, it would say Pfizer's approaching your bearish below level, get ready to enter. So any of these that we're looking at, if I wanted this Amazon, if I hover over it, hey, add Amazon to my watch list. And now it's on my watch list. And I can do all of those things. So I know 96.
Can you also add CMG as a stock to look at from Gregory Fisher?
Okay, yeah, CMG. We will do that. Okay, so now we've got that on our watch list. Oh, I've got to refresh it. So let's look at CMG. We'll go back here. CMG. Oh, look at this. Okay. This is exciting. Very exciting. Okay, so CMG bottomed, whatever you call that, and keep it a PG-13 word. It pooped the bed here. Let's do this. Let's go back and look at the whole year. You can see institutions dumping this thing, right? Testing the print, failing, more prints, failing. You know, and then here, they would just be accumulating, and then here, increasing volume, and then dumped it. This is a little bit of hindsight, but seeing these massive, massive prints and staying below them is a bit nuts. So here, let's look at this. Let's go back and look at the last month for CMG. We had this massive gap down, and we've got prints here. Look at them all. These aren't in the massive, massive millions like the ones above. There are some big ones. So look at 31.92, 32, 31.70. So between 30 and 33, there's several million here. Now, when this bottomed out here, this one right here, 29.93, $30, 570K here. This bottomed out. We came up and we tested these other prints. And we came up and there's a higher low. We didn't test this print. What we're doing now is we're breaking through these prints altogether. And this looks like it could be bullish on that. And so is there any prints today? There's, yeah, look at this, 1.2 million. Oh no, that's the 25th, 680K today at 32.72. And we're at 33.19. So what is your target on this one? Well, its ATR is about $1.39. So what I would normally do in this case, if it moves, say, $1.39 a day, what I do in my head, and this is a freebie, I times the ATR by 2.5 and go out a couple months. So $263. And I see what the options pricing is, $3 out. So if we're at 33, I'll try and get a target of 36 or some crazy moving average. This is my 50 simple. So if the options pricing is pretty good, you know, to get out to 36 within 3 months, 90 days, which is about 70 daily candles, do you think this can get from here to 36 and 70 candles, perhaps? Yeah, maybe it's worth it in the options market. So I trade options all the time. That's kind of that's my go-to. If you're trading the stock, you need a proper stop loss in there. When I'm trading these longer term options, I tend to let them expire unless it's like horrendously awful. And I know for sure that it's going against me, but there are different strategies for that. You always have to manage your stop loss. But we did have this increasing volume. There's not a lot of volume today. So you need this to break, maybe retest, and it's probably going to move on some news. If we break below 29.97, then it's a shorting opportunity there. Okay, so we've looked at those things. One thing, and the watch list. What I wanted to show you is the crux. And a lot of traders, what they wind up doing, we have a block trade indicator. And a lot of traders have a million monitors. I have 6. And so I have this running. You can have as many tabs as you like. I have this running in another window just up in my top left. So a regular block trade indicator, you can configure this. So I've got 4, for example. Anything over 50,000 shares comes here. The second one is anything over 100,000 shares, anything over 400,000 shares, and any over 1 million. Essentially, these last 2 columns I'm interested in. You can associate them with whatever you want. You want to track a specific stock or a watch list or whatever, you can definitely do that. Those of you that are interested in open, look at what's happening right here. In the last 3 minutes, right? 3 million, 4, 5.6 million on open in the last couple minutes, plus, look at here, 749,000. Another one right there. So you can just have this off. You can, and you see mine alerting. That's because I have an alert set for the SPY. Anything that comes in on the SPY, I want to know about. And then when I'm day trading, we'll do another webinar on intraday trading using the dark pools. And then you can see how beneficial it is when a print comes in, you can instantly click it and it's on your chart, right? Because that manipulation doesn't just happen on the daily chart. It happens every single day, all the time. So,
Dave, quick question there.
Yeah,
You've got that PSQ 3.8 million. Can we just look at that chart really quickly? Just see how often we actually get prints on the ultra Qs.
Oh yeah, okay. So we'll look at our friends over here at PSQ. And I've got this set at 400,000. So let's go back. So this is going back a year. Okay. So what we can do is, let's see what the largest shares are in the last year. There's not many of them. Look at this. There's today, the 14th of November, the 18th of November, and the 17th of November. These ones, and those are in the millions. And then you've got 5 and 400,000, right? So this is really, really helpful. It's like, oh, well, how big are the PSQ ones, right? So we've got this 3085. So let me just look at this. We'll just go back. 3085 is 3.8 million. We're at 3081. Okay, so let's zoom out a little bit. And what actually has happened? Okay. Going back, this is the last year, the biggest ones in the last year. We can add them if we want just by clicking on them. We had this big print here, 400,000. We came back, there was a print level, but we upthrusted, pulled back, and broke below this print. So at this point, it appears they were selling. We've come all the way back down, and I'm sure there are some down here as well. We've got this print here. We have come down, moved up through it, and have come back to it. So now what we need to do is we need an idea. And the idea is, at what point would we go long the SQQQ, or this with the PSQ, which means that's bearish on the QQQs. It's better to probably trade the QQQs. So if this one moves down, for example, the Qs move up. If this one moves up, the Qs move down. So if you're not going to trade this one, this is a massive, massive share size for the stock. We can tell just by actually looking, right? So what we could say is we're at 3082. Its ATR is 64 cents, so it might take a little bit to move. But if we can get below 3050, get below this level, close strong below this level, then there is a higher probability that this PSQ will continue down, right? Which means that the NASDAQ goes up. They're all tied together. Now we can say here, if we break above this high, right? You could even, depending on the volume, right? If this moves up and we get above 3160 something, We've got this target here, 32.20, and breaking above the print to make a new high, if that's the case. So the idea is to not have a bias. You can have a setup that looks absolutely phenomenal, but there is not a 100% guarantee that it's going to work. But what we do is, by having the dark pool, little bit of technical analysis too, you can actually say it's like, if we break above this level, I have to go long. That's my trading plan. If we break below this level, I have to go short. That's my trading plan. And then you execute that plan. By using the dark pool, I don't need to read the news, right? If somebody spent $1 billion on a trade, I would imagine he's done a modicum of research. So I don't have to do the research. I want to go play with my dogs. I have a few rescue dogs, so I want to go play with them. I don't want to be reading earnings reports or having somebody feed me crap in the news. Follow the money and save some time, right? So we've got, so what our traders are saying for Moby. Thank you, Moby. Moby made my month. Patty said that. We saw that earlier. Iris, in my first time using Moby, I was able to spot a massive dark pool print that came in pre-market. The day after I traded the stock and made enough profit to pay for 3 years worth of the subscription. So, and what we've learned as a recap, we've learned about the dark pools and block trades. They're perfectly legal, even it's legal manipulation. And we know that half of the volume anyway, we don't get to see, but now we do. We've seen proof of institutional positioning before the news, even against negative news, which allows them to buy. We've seen how institutions accumulate and distribute shares. We've covered new trades to watch, and we've dipped a toe in to see how we can find trades ourselves. We've covered less than 10% of Moby's features. So we'll be doing another webinar specifically not on what the tool does, but how the tool actually serves you so that you can make more money for yourself. So we've got the real-time block trade indicator, one-click scanning for trade setups, integrated watch list with real-time alerts. You can hear them going off in the background, 6 years of historical data right on your chart. And you can visualize the institutional positions and integrate it with your trading analysis. You can scan 10,000 stocks with one click to see, and we did that. We found Amazon, we found Apple, 2 minutes, and get the jump on the institutions. So if you could save hours of research per week and spot institutional trades before the price actually moved and increase your confidence and maximize your ROI, one trade could pay for your whole year's subscription. What is that actually worth to you? Is it something you would consider adding to your trading toolbox? Well, the market won't give you discounts, but we will. Moby is having a Black Friday sale. So the 50% off your first month, that's for a monthly plan only. There's a code there, Moby BF50 for Moby Black Friday 50. It ends the end of the day, November 30th. So any plan that you choose, the annual plans are not discounted, just the monthly plans. So that's the equivalent of saving about $50 to use that coupon. And it's a deal with no drawdown, only upside. So I'd like to be able to hear from anybody. You can talk to me at support here at mobyticktrading.com, and questions, put them in the chat. Otherwise, if there are questions, if anybody wanted to ask anything, I could stay a few minutes later. Otherwise, we're right on time to pack it in. So let me know, everyone. Okay, so Greg, you're the winner. Okay,
yeah, so Gregory Fisher is our winner for being the most active in chat. We are going to be doing these once a month. If you all have any questions, you guys can always reach out to me, also on Twitter, YouTube, or my email, carpeprofit@gmail.com. We also streamed live on Twitter. However, whenever I'm talking, everybody's going to miss that, so we don't have feedback. So the people here on the webinars are getting, the first pick. And if you guys have any questions, if you see any improvements as well, Dave is absolutely awesome about taking things into consideration with his programmer and putting things in there that the traders can really use, right? So this is a trader-friendly software and meant to help you profit.
Okay, thanks everyone. And we'll get the recording out to everybody later. We'll do a bit of editing. All right, thanks for hanging around, and we'll see you in the next one. Take care.